Girish sir,
Yes, sir.
sir regarding the YouTube link.
Wait, I'm doing my work.
Okay, okay, ठीक है.
Yes, Adi sir, don't worry about
हाँ,
YouTube link.
okay,
Tere sir
okay,
will take care. Don't worry.
okay, sir, no problem.
We're just waiting for Santosh sir, right?
Yes, sir.
Yes,
Okay.
sir, I have called him. We are about to call.
Okay.
Yes, ready from my side. Can go ahead. Sadiq sir,
Yes, sir.
ready from my side. You can go ahead.
Uh, and what about Santosh sir? Is in?
Join.
I am in. What about madam?
Yeah,
I'm
ma'am
on.
is also there.
Okay.
Yeah. Madam, can we proceed?
Yeah, yeah, you can start.
Yeah. Ruchi, start.
Okay, yes, sir. A very good afternoon to everyone. I, Mrs. Ruchi Negi Agarwal from Thakur College of Science and Commerce, welcome our guest of honor for today, CA Amit Chaudhary, our principal, Ma'am Dr. Chaitali Chakrabarti, our vice principal, Sir Mr. Sachin Kamli, Dean Commerce Faculty, Dr. Parul Singhal, our IQAC coordinator, Dr. Santosh Singh, my fellow colleagues, and to all the viewers and participants of this webinar. Let me first give a small glimpse about the host institution, that is Thakur College of Science and Commerce. It is the largest unaided institution in Maharashtra with glorious achievements in the field of academic, sports, research, and other extra co-curricular activities. Thakur College is relatively a young institute established in the year 1992 and has successfully completed the third cycle of NAC with A grade. It is a matter of great pride for Thakur College that it has been conferred the Best College Award for the academic year 2018-19 by University of Mumbai. As per Education World magazine, April 2020 issue, in India's top-ranked private autonomous college league table, Thakur College secured 55th rank all over India, 15th rank in Maharashtra, and 13th rank in Mumbai, among the top autonomous colleges in the private autonomous category in a survey done by Education World magazine. Thakur College has been featured as one of the top 10 educational institutions across India in the annual coffee book Edupreneurs by the Times Group for implementing innovative ideas in the field of education. Thakur College has more than 14,000 students, 225 teaching staff, and 150 non-teaching staff, with more than 22 departments having undergraduate and postgraduate section. The college has consistently attained outstanding results in academics at both degree and junior levels. The college is committed to provide quality education, which is reflected in its state-of-art infrastructure, well-stocked library, closely monitored administration, and excellent academic ambience. It also has a full-fledged research and development center that gives the students and teachers an exclusive area to engage in research activities of their choices. The faculty members are also encouraged to take up industrial consultancy and research and development projects in their respective areas. College also encourages incubation and startup projects as it is also having Center of Excellence Learn and Earn program. So this is about Thakur College of Science and Commerce. And the jewel behind this, who has developed college, who has taken college to this great reach, is our own principal, ma'am, Dr. C.T. Chakrabarti. I now invite our principal, ma'am, for the further.
Thank
Hello.
you, Ruchi. I will
Yes,
just
ma'am.
object to your one point that it is not me, but it is my team who has worked along with me, along with my thought. We all work together and all of us have joined hands to bring the college up. So a good afternoon and a warm welcome to all. And thank you, Ruchi, for a nice introduction of the college. I take pride to welcome CA Amit Chaudhary and all participant delegates to this relevant webinar on impact of COVID-19 on financial sector of India,
Thank you.
opportunities and challenges. Amit Chaudhary, I welcome you for this session
Thank you, Mr.
on
Chakrabarti.
behalf of the management, myself and my staff. The COVID-19 pandemic is having a deep impact on the Indian economy and members of Indian industry. The magnitude and speed of collapse in economic activity that India has seen over the last few weeks is unprecedented, and there is a tremendous uncertainty about what the future holds for business and enterprises. The pandemic has paralyzed economics, compelling businesses to re-evaluate their strategies. Companies will need to build their financial muscle and focus on developing a lean structure to steer through this uncertain business environment. Ideally, the sharp declaration in the April manufacturing activity is not a surprise to all. Economic activities have come to a total standstill since late March, when the nationwide lockdown was announced. Bankers and analysts expect significant spike in non-performing assets going ahead. The pain may not be visible immediately since the RBI has extended regulatory relaxation, but that cushion won't be around for long. The fact remains that man hours, sales hours, and opportunity profits are lost for many companies. All this accounts for non-payment of loan dues or employment's layoff. The moratorium period will end soon and the companies and individuals, borrowers will have to resume repayments from June. With no business happening, workforce availability remaining an issue and rampant pay cuts, it is doubtful how many borrowers will have repayment capacity. Finally, it is the Indian financial economic sector which takes the fall. Every industry is seeing a lockdown on its operation and revenues. A simple maths tells me that do we have people buying a house somewhere? Is someone planning a foreign vacation? Do we have people buying the high-end luxury cars? What about retail in India? Other than food and necessities, no other consumer goods are being bought. COVID-19 will change the way the world looks, just like the Great Depression, dot-com bubble, and the 2008 financial crash did in the past. The question on everyone's mind is, are we ready to convert these challenges into opportunities? So here I see CA Amit Chaudhary who will clear our point on this fact that do we have challenges? Do we have opportunities? So I welcome you and all the delegates for this fruitful sessions. Thank you very much. Over to Ruchi.
Thank you so much, Principal Ma'am. Now I invite one of the gem of Thakur College, our IQAC coordinator, Dr. Santosh Singh. Over to you, sir.
Thank you, Ruchi. Good afternoon, all of you. On behalf of Thakur College of Science and Commerce and as a IQAC coordinator, I welcome all of you for this webinar. IQAC of Thakur College of Science and Commerce, we take a lot of initiative for arranging a various skill and talent enhancement program. IQAC started the year of 2005 as per the NAC guideline, and since then we have completed 3 cycle of a NAC accreditation and last 2 cycle with the A grade. We take a lot of initiative for the quality education, various environmental issues, issue related with the women empowerment and community-based services. We initiated a lot of certificate courses and value-added courses. Now, today here, the topic, what are going to be the impact, opportunity, and challenges in a financial sector? This is much more relevant when we are looking for economic slowdown, when there is unemployment, daily basis, there are some index which is coming, some statistic which is coming, what is going to happen to the personal finance, what is going to happen to the share market, how it is going to have an impact on agriculture, what is going to impact on a pharmaceutical sector, what is going to be the future of IT sector, what is going to be the future of education sector. There is a lot of discussion on various issues which is happening. There is a panel discussion on every channel which we can see. Now, in this scenario here, we have the best person where we can discuss here what are the possibility, what are the opportunity. So I welcome Amit Chaudhary sir for this webinar. I welcome all my fellow participants, researcher, faculty from a different institute, my student group for this webinar. And I hope there is going to be a fruitful deliberation for this session. And let me put one more thing here on a record. In last 1 month, we are completing a series of webinar, multiple webinars we have completed, and we have approximately trained 50,000 plus participants through this webinar. So this is also one of the initiative from the IQAC. Like we are not looking for the just a relaxed duration. We are just not looking for an off day. We are still looking for various community services, and then accordingly, this is also one of the good initiative taken by our accounts department. So thank you very much. I can very well understand this is the odd time duration, 3 o'clock, but still here 454 participants, those who are joined. Now here it shows here how the participants are also vibrant and they also want to utilize this duration. So thank you so much for joining here for this session.
Utilize the time fruitfully.
Fruitfully, yes ma'am, yes ma'am. So 458 participants, those who are there, and I'm very much sure in next 2 minutes we have to lock down this particular session. So thank you so much for this response, and over to you, Ruchi Degi.
Thank you, sir. I would like to tell to the viewers as well as the participants, you can ask your queries, doubts to the speaker on the chat box provided, but the chat box will be activated only 20 minutes before this session will get winded up. So,
Ruchi, little louder.
Hello.
Little louder, yeah.
Participants, I would like to convey that the chat box will be activated once the speaker session is over. Okay, so you can put in your queries in the chat box. Now we'd like to invite our prominent personality of Thakur College, our Dean of Commerce, Dr. Parul Singhal. Over to you, ma'am.
Thank you, Ruchi ma'am. It is an honor to introduce the guest for today, CA Amit Chaudhary. I hope I can do justice with his introduction in whatever limited time I have been given. Sir is a graduate from St. Xavier's, Kolkata, and a CA by professional. A financial professional having over 17 years of experience in accounting, budgeting, fund planning, forecasting, taxation, compliance, and payable management. Sir has got an experience of working in various functions in the industry as well, like sales control, startup greenfield project, R&D and factory, logistics management, etc. His rich experience lies in obtaining license for export-oriented units, incentives under SEZs, managing capital investment of more than 3,000 million in greenfield project. Sir specializes in co-piloting, business decision supports, operations, management and support, governance and control, etc. Sir is currently working as Senior General Manager, Finance with Glenmark Pharma India, India's leading company with global operations and only pharma company in India with NCE and NBE in its portfolio at various stages of development. He's been recognized for all his efforts by various awards like Chairman's Excellence Award in individual category in the year 2019, Chairman's Excellence Team Award in the year 2017, 18 and 19. Prior to Glenmark, he has also been associated with Nestle India, Roche Diagnostics, Gati, Hindustan Seals Limited, and won many accolades in different capacities. I'm sure with Sir's immense knowledge and varied experience, He's the best person to guide us on the topic of impact of COVID on financial sector, opportunities and challenges. Thank you so much. Over to you, Ruchi ma'am.
Hello. Yeah. Thank you, Parul ma'am. Now I invite our guest of honor for today, CA Amit Chaudhary, to take the proceedings further. Over to you, sir.
Thank you, Ruchi. Thank you, Parul. Thank you, Dr. Chakravarti. Thank you, Dr. Santosh. It's been an honor for me as well to be a part of your team to discuss today the impact of COVID. I will try to share my views at what I think about it. But generally the perception changes about how the economy will perform over a period of time. Different analysts have different thoughts. So what I share today is my personal opinion based on the experiences that I have. And I hope I would be able, to have the same thoughts what the others think about. With this, I would just like to share my screen and straight away go to the presentation part of it so that, we can discuss this further once we are through that screen. Done. Mute audio. Yes. Am I audible?
Yes, sir.
Usha ko bhi.
Yes, sir.
Hello.
Which
Right.
It's audible, sir.
You are audible, no issues.
Okay, thanks a lot. So I think all the viewers are able to view my screen. So I have put my thoughts across on some of these, through some of these slides, which I'll take through of the impact of COVID-19 and the financial sector specific opportunities and challenges that it throws up. One disclaimer, while we start the discussion, the views expressed in these slides are my personal and individual opinion and does not have anything to the way the Glenmark thinks or operates. So, with this, that's a disclaimer that we have. So the discussion that we are going to have.
Little excuse me, sir. Can you be a little louder, sir? Little louder. Yes.
Sure. Thanks. Is this better?
Yeah.
Okay,
Yeah.
great. So the agenda today, what we have, you can see across that, we will be discussing about the personal finances. Then we go into the sectoral analysis to understand exactly how the key indices are performing. We'll look into some of the sectors like the industrial production sector, the manufacturing sector, the impact of this on the GDP, the stock markets, the unemployment situation, the depreciation and the foreign direct investment. Further, when we move on, we'll move on to the impact on the financial services. We'll talk about the banks and the NBFCS, the mutual funds, the insurance. And then we'll go on to discuss about the way forward and the government schemes and then for some of the question answer session. But before, we go start, first, we have seen the situation, which is unprecedented. We have never thought that something like this could ever happen, where we would be confined to our to our rooms, to our houses, and we will have to operate out of it. So but however, we have to salute the indomitable spirits that we have that will help us to take us away from these viruses, and we will come out fighting better and being a warrior against them. At the same time, while we speak on, there are people who are on the field, who are working day in, day out to make our lives easy. There are the health workers, the policemen, every other person who is out there to make our lives secure. And we hope that each one of us will follow the guidelines which are being said. To start with, I will start with a famous quote where one C.C. Scott, an army officer in the British Army, had said, "The human spirit is stronger than anything that can happen to it." And how true it is, really. We have seen, if you take some time back, travel back to the history, turn some pages, look 2 years, 10 years, 50 years, or even a century. The world has undergone life-changing experiences. Civilizations have come and gone. Dynasties have been born and perished. The only thing that has not succumbed to anything is the human spirit. Unfathomable, indefatigable, undeterred, resilient, undefeated. In all that has happened and is yet to happen, the one winner has always been our spirit. Strong enough to fight any battle, smart enough to combat any circumstances, and strategic enough to overcome all hurdles. So let's keep up the spirit, and I hope you enjoy the subsequent slides. Before I get into the macro level discussion, I thought it is imperative that we understand the impact of this COVID on our personal finances. When we are doing something good at a personal level, the impact of it can be felt at the macro level as well. So these are some of the best practices which I thought would help each one of us, in doing, particularly during this COVID scenario. To start with, let's start with the first requirement, and this is an insurance. Now, have we evaluated ever that what is the insurances that we do? We are also worried about taking a car insurance, but many of us may not have a proper health insurance or even a term life policy. Some of the people who work in corporates, they don't have a separate individual policies for health insurance because they are covered by their organization. But they forget that in case they were ever to be laid off, what happens? Do they have an insurance to cover for any medical emergencies that come in? Do they have a term life policy in case of an unfortunate event? Who is going to support their family? So what becomes imperative during these times, and what it has taught us, that we must have certain policies, at least to safeguard ourselves and to safeguard our family. One of them is the term life policy, where where it goes for, but where is to cover up for our life, and the other is to cover for in case of a health needs or a health insurance. But before you go into any kind of such policies, there are various schemes available. Evaluate these schemes, opt for riders only if available, only if necessary. Make sure that one thing you must remember, that whichever policy insurance that you take, the premium has to be paid every year, and that you should be financially good enough to make that the premium pay. The premium you should be able to pay. The next thing that comes, the other is the interest on the home loans. Presently, most of us have taken some kind of a loan. The first thing that, when we become, as our parents taught us, that the first thing in your life that you should do is, as soon as you are a bit financially you are becoming independent, purchase a house for yourself. And that is what me and many of our colleagues whom I know have taken. So most of us, even who have joined us, will actually be having some kind of a loan, either with themselves they would have taken, or would have taken it, or their parents would have taken it. Now, when we take a house loan, we have to understand that there is a component called the interest, which is payable along with the EMIs that we pay. Now, many of us feel that the EMI that we pay and the interest that we get some kind of an income tax benefit out of it. So now, should we, in this COVID scenario, should we continue to pay the house loan? Should we prepay? Now the question arises, should we prepay the house loan that we have? Now this question should be answered based on your evaluation and of the income that you derive from the free cash flows. And many of us would be having some additional cash flows with us. In case you have some additional cash flows, please evaluate whether your cash flows are giving you sufficient returns which are more than the interest that you pay. Now, in this scenario of the COVID, the interest rate or the incomes that you might generate may be quite low on these investments that you make. Just do evaluation. If you feel that your free cash flows are not giving you sufficient coverage of the income, please use that to prepay your house loan. But of course, when doing so, make sure that you are covering yourself for all the commitment that you have now or in the coming times. Government has done one thing, that is, they have given some relaxation in paying the EMIs. They have given a 3-month moratorium. Now, the 3-month moratorium, that means the loan that during this period, I may not be required to pay the EMI that falls due. Please note, it is not a waiver of an interest. It just happens that in case you have taken, let's say, an 84-month loan period, and with a 3-month moratorium, the loan period becomes 87 months. That's the only change that happens. You still continue to bear that interest. The principal that remains unpaid as on date will still carry an interest, and that has to be paid during the lifetime of that loan. Remember, as I said, interest is not waived off. There are certain type of loans that people have taken, which carry a high rate of interest. For example, the credit card rollovers, the personal loans. Try avoiding the carryover of them, or try avoiding a moratorium on them, because they carry a high rate of interest, particularly credit cards, where the interest rate is anything between 30 to 36%. So if you do not pay, though you know your subsequent payments do not become immediately due, but you would be paying a huge amount of interest. So when you are trying to take a decision, please evaluate these factors and then take a call on it. As we say, think wisely before you take any kind of a loan. Similarly, think wisely when you do any kind of an investment. The other factors that comes into, next is the mutual funds, the SIPs, the investment that we do. So many of us have been investing. They do one-time purchase of an SIP, of mutual funds. Some do it through an SIP mode. Now, we would be thinking, should we continue with the SIPs? Should we stop them? Should we encash the investment that we have already done? So my thought on it is that presently the markets are down. The securities and the shares or the value, your investment value may not be, maybe below the principal amount that you would have investment. But let's look at a long-term view. In the long run, things, once it is down, of course, it's going to go back to the normal, and it's going to start giving you returns as well. If you were to discontinue your SIPs, then you may not be taking the benefit of the low cost of some of these securities, which presently are trading on the stock exchanges. So my suggestion would be that please continue with your SIPs, review your portfolios at regular interval, opt for systematic transfer plan, where, with the growing age, you always have a certain amount of money moving in from the equity holdings to the debt-based holding. The next one, or which is something which is, something which I always like to discuss as an investment in gold. The love for gold in India never seemed to die. Unfortunately, India is not an exporter of gold, and 99% of India's golds are imported into India. I remember, almost 16 years back, the price of gold for a 10 gram was close to around 6,000 rupees. And today is something around 44,000 rupees. So over a period of time, it has grown 7.5 times. This is something which we normally cannot think of. So now question arises, should you continue to hold your investment in gold? Now, because the prices have gone up, should you divest from gold? I would say no. I would say you continue with it, or in case even if you were looking to divest from gold, that's money that you would get, use it to buy a sovereign gold scheme, a gold bond scheme. These schemes which are offered by the government, they are tradable in the exchanges when they held in the demat form. They give you an interest of 3% per annum, and after at the time of, once you want to, you can sell them at any point of time, and after 5 years, you can redeem them for the value of gold as on that existing date, which is different from holding a physical form of gold. Because when you hold a physical gold, there are risks associated with holding such gold. It has a safety issue. When you go to sell in the market, they will never give you the rate. They will have some kind of deductions happening out of it, and you would not get the fair value of it. So I would say, continue to hold on to your gold. And again, many of the portfolio planners also say that anything between 15 to 20% is something that should always hold in the form of a gold. Now, physical or gold bond scheme is something that you decide, but each has its own pitfalls and each has its own advantages. That takes me to my next personal investment area, which is, should you exit from the stock markets? This thing has even crossed my mind, though I'm not a big player, though I'm not investing in a huge amount in stock market. But I have seen my investments have come down drastically. It crossed my mind that should I exit from the market? And then, I realized all my education that has gone through and all my experience, that when the chips are down, you should not exit. To remain remain in this market for some more time. I don't see the markets growing immediately in the next 1 or 2 years, but after that, there would be a point where again this market will start growing. So it's a natural phenomena that happens. Once which goes up comes down, and once it comes down, there will be a time it will reach the bottom and it will grow. It will again start growing. Now, if you were to sell out the stock that you hold, you may not, the investment value would have largely reduced. You may not get proper returns. But yes, what important is that you evaluate your holdings. See if these have drastically fallen down. Try to invest in corporates which have strong fundamentals. That will ensure that even though there is a momentary decline in the value, but in the long run, you are going to gain out of it. So my thing will be continue to remain in the market. Please do not follow all the stock rumors that spread across various social media like the Facebook or the WhatsApp. That will actually lead you into losses. Avoid any form of impulse buying. The next thing that I would like to discuss on is an investment in property. We have seen that post demonetization, the real estate markets have never peaked. It's still very shaky. 2 years and more, the prices have remained stagnant. And with COVID coming in, the prices are likely to decline. The developers, as per an unofficial estimate, there are close to 43 lakh units which have remained unsold and which is being held as an inventory. So all these new properties which come up, they may offer you very good rate, but now we'll have to think whether we really want to buy a property at this point of time. Buying a property has a big liquidity issue. And when you are trying to sell them, you will never get the market rate that you would pay to buy the same kind of property. So you need to actually understand, why are you buying a property? As I said, buying a property is something, our parents have said that you invest at least buy one house. So I would say, okay, it's good to have one house depending upon your financial capacity, but investing in a second property at this point of time may not be the right decision. Hold on for some time. Let's look how the things shape up, because it's the early days into COVID and we are all estimating how the people would react post the lockdown is over. So we'll have to wait for some time and see how these things shape up in the real estate market, and based on that, we can take a decision. So with that, so once now we move on from the micro level, now let's look at some of the economic outlook, some macro level statistics, some macro level data, and what various analysts and economists have to say, and what's my personal opinion on some of these areas. So the first thing that I would like to discuss is on the industrial production. The economy is going through a rough phase. It is declining. The growth will happen, but it will be gradual. Let's look at the industrial production data, which is on the left of my screen, and you can see through the graph. If we see that the production has decreased 16.7% year on year in March 20. That means the same number, if we were to look at the March 19 numbers, the production has gone down by 16%, even though we were only in the last 2 weeks or last around 10 days, we were into lockdown. That has resulted in such drastic downfall of the industrial production. The decline that has happened is steepest since this record started being kept in 1994. What does it look like in the forecast? Even after the economy opens up, do we see that is there a demand which would be created? We are all skeptical about spending any additional money. We do not want to fund new things. We do not want to buy new things as of for now. So we would not be creating a demand. So the industrial output or the growth is not likely to happen immediately. It will be over a period of time that you would see some kind of increases happening. We can expect by the end of this year that we will grow, we will come out, so we will grow slightly. But if you were to still compare with the 18-19 numbers, we would still not be growing as per then. We would be better off in the month of September compared to August. In the month of December, we'll be better than November. But what we look at by the end of 12 or by the end of this year, we would be having something a 3.5% increase. And probably in 22, we would have look at some 4.5% of the production that we need. These are some of the estimates by the analyst and the econometrics module, but the growth would be gradual. Next, some of the another factor, which is important to understand is the manufacturing production. The manufacturing production is important because that gives you how our manufacturing setup is done. Now, the 29.7% of our GDP is contributed by this manufacturing industry. If you look at the chart on the left, the manufacturing production declined by 20.6% in March 2020 over the same month in the previous year. So now what does that mean? That means that our production numbers or our manufacturing numbers were as low, a decline by 20% compared to March 19 numbers. What it would look like by the end of this year? Now, even if the economy opens up, not much is going to happen immediately. There are this migrant labor, the issue with the migrant laborers. Many of these laborers are going back to their hometown and the home villages. And now with the monsoon season coming in, many of them would prefer staying back, doing some kind of an agricultural work in their area, in their village. And then once the monsoon season is over, somewhere towards the end of August or September, they're coming back. So even if there was the manufacture or these laborers coming back, you will still continue to see the manufacturing pace is not picking up. So the twin impact is, one is the demand is not there, and secondly, the labor issue would continue to be there. So these things will have an impact on the manufacturing production. We may see some signs of positivity, but that would happen only towards the end of 2021, and maybe 21-22 may bring in some positive news, but still it will not be able to reach the 18-19 or even the early part of the numbers that we had clocked in 1920. Another important sector is the steel production. The steel production is so critical for us because it not only employs a huge number of people or huge number of labor, it also happens to be one of the industries which is largely export oriented. Steel production, the steel is used across various industries, whether it is car, manufacturing, and also as a raw material to many other industries. If you see the data on the left, or if you see the chart, if you see that from February, where we had done close to around 9,500 tons of production, it declined to close to around 8,600 tons in the month of March, just with 10 days of closure. With April, May and June, where hardly any activity is happening, you are likely to see that the production is virtually zero or a very, very small numbers. So the first quarter of this financial year is completely washed out. Only by the end of this year, we estimate that the production may go up to around 8,500 tons per month. And in the subsequent year, in the financial year 22, we might see that the production touches the 9,000 tons per month, but which will still be lower than the production that we clocked in 18-19 end or the beginning of 1920. The next one, which is, the Purchasing Managers Index and the Service Managers PMI. Now, these are some things which the outlook, which actually shows the industry sentiments. The PMI is nothing but a measure of the prevailing direction of the economics in the manufacturing sector. The information is gathered through a survey which is done at a regular interval, mainly on a monthly basis across 19 industries to understand how the supply chain, how the purchasing in the organization is happening. Both the upstream and the downstream activities are evaluated, and based on that, these numbers are compiled. Now look at the April number. This was the latest numbers that were available. And if you see, our April numbers had declined to 27.4. The market agreed consensus is something around 42, while India has always been above 50 and 50 throughout the 1920 numbers. So the very first month of April shows a very low number. Come this current quarter and the quarter following, we would see that the PMI is still very, very low. Similarly, the same sentiments are also being reciprocated in the service industry as well. The data here is collected across 350 private sector entities where they track the sales, employment, inventory, prices. And based on that, our number stood at 5.4, where the market expectation or acceptability is close to 40. We have been way above this throughout the year at close to around 50, but expect that this number to remain low even for the remaining part of the year. Of course, we would go back, we will grow so gradually from 5.4 in this from this quarter, we may go to maybe 10, 15 in the subsequent quarters, but reaching the 1920 levels looks very difficult, at least for a year and a half to come. This subsequent slide, I have tried to summarize or give you a pictorial view of various sectors, where they are in terms of who would be in red, who would be in orange, and who would be in green. Except for the e-commerce platform, I do not see any other industry doing better. Most of these industries, which are the generally who employ a huge number of people, if we talk about the general trade, the cement, the automobiles, the real estate, the travel tourism, the iron and steel exports, they are all likely to remain in red. Let's look at the data on the right. Let's look at the cement manufacturing. A 20% reduction in the month of March compared to the February data, it's a steep decline. And of course, with this quarter completely being closed, we don't see any activity there. Let's look at the car production. Again, car production is an important factor because this employs huge labor. Many of the output of many of these industries are the raw material for a car industry. At 36% drop in March, and in this current 3 months or the current quarter, I virtually see nobody buying any new cars because all the dealers are closed. People are skeptical to spend. And hence, I do not see this sector also going up. Moreover, with the Ola and Uber coming into picture, it becomes easy to get a car at any point of time. And the government announcement that 5 to 6 years down the line, we would like to have more electrical cars on the road than the fossil fuel cars. That has further demotivated the people from investing or buying a new car. And as a result of which, all these put together, we can see that the car industry is not likely to go up in at least 2 to 3 years down the line. Let's speak a little about the tourism industry as well. An industry which employs close to 8.1% of the total employment of the country and contributes around 9.2% of India's GDP. Just pause for a while and think. This is the month of May, where if it was not a COVID, many of us would have been traveling. We would have been enjoying a vacation. आप अपने बच्चों के साथ, अपने घर वालों के साथ में आप कहीं घूम रहे होंगे. But आज क्या किया आपने? हम कहीं नहीं जा रहे हैं. हम घर पर ही बैठे हैं. We have decided not to spend any money. Of course, there is completely lockdown. There is no travel. We cannot travel. But what does it mean? हम अगर नहीं जाते हैं, तो many of these hotel industries, many of these locations where we would have normally visited, these people are not generating any revenues. I know because some of these people who are into this industry are known to me. They say that they had done fair amount of investment in renovating their hotels. But now with no tourists coming in, all their hard money that had earned and which had gone for the renovation will go down the drains. There will be hardly any visitors. So what happens? Not only that, there are many people who are indirectly linked to this industry. Let's look about the aviation sector. It's a sector which has always been in a problem, but now they will be facing a lot of losses. They have the fixed commitment in terms of the lease for the aeroplanes that they have. What happens to them? Their cost, they have to be paying the cost. Many of the people are likely to be laid off in the aviation sector as well. So tourism across India would be zero in this quarter, and coming in the subsequent quarters, that would still remain very, very low. So the picture is not at all rosy. Some other feature that we look at is the lower collection of taxes. Again, when we know that there is no economic activity happening, of course, it is bound to impact your tax collection. The direct tax collection, which normally contributes around 5.9 to 5.6% of my total GDP, 1/4 of it is completely washed out. Many of the corporates who are contributors to this tax in this revenue have not generated any kind of income, as a result of which there is no tax which is paid by them. There are people who have been rendered jobless. There would not be any tax collected from them either. Let's look at some of the data on the left. The corporate tax collection in 1920 stood at 5.56 lakh crore, while the personal tax income tax that we paid accounted for around 4.5 lakh crore in 1920. In 1920 as a number, if I look at, it had declined by over 8% compared to the 1819, and it's happened for the first time in 20 years that the collection on direct taxes has actually declined from the previous year levels. Now, with COVID coming in, with at least 1/4 washed out, second quarter looking very shaky, third and the fourth quarter, it may still try to stand up. So where will this direct tax collections, what would happen? It would be absolutely low. Now, what does it mean from the economic aspect? Now, when we look from the economic aspect, we would see that the government spending would remain intact. Government has in fact given us a lot of stimulus that would increase their spending. They would be driving some infrastructure projects. But when it comes to the collection part, there would be a decline. So what it would lead to? It would lead to the government borrowing more from the banks to fund its expenditure. Because of course, government cannot stop its expenditure in the scenario because a government push is required to create a demand. Now, what does that mean? That the gap between the spend and the income would widen, which would lead to the government borrowing from the bank, and as a result of which the deficit financing would increase. So which again is not a very, very healthy factor. To a certain extent, we can accept a deficit financing that would, because that is something, that is something many people advise. A bit of a deficit financing is good for the economy. But to the extent that we believe it can happen, or the amount of gap that would be created, it is absolutely unprecedented. And government will actually have to start thinking how to mop up more collection, or what should be done to ensure that at least it is able to meet certain of its requirement. Now, all this discussion that we had now brings us where all this can be seen through the GDP trend. Now, the early part of 17, 18, 18, 19, we had some good growth numbers. Come 1920, the decline started. The GDP never stood up to the levels at which we were in 17, 18 or the early 18, 19. If we look at the 1920 trend, from 1.3% at the start of January 19, by the time we reached at the January 20 figures, we were already from 1.4 or 1.3, we reached to 1.1% GDP growth. And again, this particular quarter, we would see that economy will contract by close to around 7.2%. That was the economists expect. Some of the activities happening in the subsequent quarters, we will see that there is some kind of a growth happening. However, they will still remain negative compared to the same time period in the previous year. But the growth or the degrowing that would happen would be at a lower pace. By the end of 2021, we estimate that the Indian economy would be anything between minus 1.2% to a positive 1%. However, one thing I would like to mention here, it's still among the better performing economies compared to all the other economies in the country, or other economies in the world. We would, even if we were to rock at a 0% growth or a 1%, we will still be better off than most of the economies worldwide. How does the future look like? The future, if we look at, it will not be that immediately as soon as the lockdown is over, that we would be creating demand and then suddenly the economic will start looking upward. It won't happen. The growth will happen over a period of time, but it will be gradual and slow. So what we can expect is that the growth model will something look like a V pattern, growing at a slow pace, and not a U, which is where we have issues with one time, and then once things improve, there is a sudden increase. The figures, the GDP growth forecast figures, the graph that you look also depict the same thing, that the growth would be gradual. But however, to be at the 18-19 level, it requires an ample push, which at this point of time looks difficult. And the one primary reason behind it is the demand. Let's look at the stock market as well. The graph that I present here shows how the BSE Sensex has performed over a period of time. We just before the lockdown, or towards towards the January, February, and early March, we had clocked the Sensex touched an all-time high of 42,000 level. The moment the lockdown was announced, it fell down straight to 26,000 level. And though we have gradually improved, and we are hovering something around the 32,000 mark presently, but what it does generally indicates is the perception of the companies who are a part of this BSE Sensex. They are the 30 major companies whose performances are being tracked. And if these 30 companies do not perform well, then you are likely to see that the current trend, the volatility, to continue even for the rest of the year. And even when going into the next financial year, we would still not reach the 42,000 level mark. It will take some more time. I believe that only towards the end of 22 or the year thereafter, the 22-23, we might see the going back to the 1920 levels. We have discussed about some of these economic parameters. Now it's important that we also discuss about the unemployment situation. The unemployment across India has been, for the whole year, has been around 7.48%. But with this lockdown, what we really see that close to 114 million people, these are unofficial estimates, have lost their jobs, mainly in the form of the laborers, which are around 91 million. Many of these salaried people have also lost their jobs, and the unofficial estimate is something around 17 million. That balance of is the ones where the businesses have closed and they have been rendered without any business to do. The situation is overall grim, and I don't think the economy will recover in the coming months as such. And the major reason, as I've been mentioning across my slides, the major reason being the demand. Since unless the demand is created, we will not see things improving much. Let's look at the graph on the left-hand side at the bottom. We expect that by the end of 21, the unemployment situation in India will go up to close to around 12%. Though there will be some more people, as you know, with monsoon coming in, many people preferring to stay back in their location, and they're coming back in the third quarter, they will see that some of them getting employed, but still overall we may find that the unemployment situation will be close to around 12%. It also has an impact of the infrastructure projects, because of, again, people not being there, migrant laborers not being there. We will see that the infrastructure projects getting delayed, the cost increasing, the social distancing have to be maintained, the projects will get delayed, and the cost would increase over a period of time. So this again is into a negative factor. Two more areas where something we would like to discuss is a currency depreciation and a foreign direct investment. A currency depreciation towards at the start of the year, we were something 1920. If I talk about our numbers to dollar, $1 would be around 69 rupees that we would. Today, it is close to around 76. We have seen the rupee decline by close to around 8%. However, let me tell you that rupee is still been doing better than most of the currencies globally. But what does that mean? That means our imports will increase. India is largely dependent on import for fuel. They're largely dependent on imports. Our bills will continue to be paid in dollars, as a result of which our import bill on fuel is likely to increase. At the same time, when we talk about, people say that when the imports become expensive, people tend to move to the domestic goods. But for that, it would need capacity creation, which cannot happen overnight. It will take some time to happen, for which till that time comes in, we would have people buying imported goods, as a result of which you would see the increased prices coming in. So that it impacts each one of us who are buying some kind of goods where there are one of the component is an imported material. But it also does one thing, that is, many of us have actually, many of the corporates generally, they have taken the foreign currency loan. With the decline in the rupee or a depreciation, we would see that the cost of the foreign currency loan increases, because now we would have to pay them a higher value in terms of absolute value in terms of dollar. So the currency depreciation also has an impact on the financials of the corporates. Another important feature, the impact would be on the foreign direct investment. In 1920, we had close to around $40 billion being invested in India in the form of foreign direct investment. Now, why is foreign direct investment so important for us? Because it's a major source of non-debt financial resource. Why people want to invest in India? Because we have low cost, we have good education in India, we have technology there. So we have taxation benefits, we have the policy consistency of the government, as a result of which foreign direct investments come into India. But recently, the government announced a change in the policy. All the countries, if any investment coming from a country having a land border with India will need a special approval from the government. Now, this has been mainly done to protect the Indian companies from the opportunistic takeover or acquisition of the Indian companies. This is what mainly the Chinese investments happen, and they tried, and there is a fear that would happen. So to offset this, the government has introduced this concept of taking approval. But what does that mean? Many new startups, many new small technology-based companies, they were being funded by these Chinese investments. But with this, this particular approval, it would discourage many such investments. Many such new startups would immediately start facing problems in terms of the finances. So we would see that some amount of foreign direct investment is also being impacted in the COVID situation. And of course, with no investment and of course with no demand, the economy not doing well, foreign direct investment is also unlikely to come. So that with this, I would now like to go into a more detailed analysis, mainly of the financial services. Excuse me.
Yes.
Let's look at the financial sector. When we talk about the financial sector, I would mainly talk about the bank, the NBFCs, the mutual funds, the insurance sector. What is plaguing our banks presently? That is a lack of liquidity. And why so? Because there would be defaults. There would be an EMI moratorium has been announced. People have deferred their payments. So what the banks would not have sufficient liquidity at their disposal to pay or to lend to the business houses. This would then further aggravate the situation. The collateral that would have been, one is the risk. There is an increase in the risk. What I refer to as risk is the collaterals, mainly in the terms of stocks and shares, which have been given as collateral. Their market value have reduced. And if there is a kind of a default, mainly if as a willful default, we might see that the securities, if were to sold, they would not cover up the entire value of unpaid loans. The other problem that we face is the increase in the NPAs. Now, many of these defaults that would happen, some are forced, some are willful. It would force our banks to reclassify some of the debts into the non-performing assets. Of course, there are certain policies based on certain regulatory guidances based on which the NPA classification has been done. But it would lead, by even after this moratorium is over, we would see many of the companies or many of the small time investors who have taken loan from the banks are unable to pay their debts. So even post 3 months, we might see that the NPA as a non-performing assets of the banks are increasing. Then the other problem that the banks would face is the non-monetization of the repossessed assets. What I mean is, when you default in paying your home loan or your cars, the bank people then at a point of time, they would repossess your house or repossess your cars. What does that mean? From the book's perspective, of course, it has been classified as an NPA, and the books would show that they have sufficient collateral, but with the demand not being there, it would only remain as an asset in the books, which has been repossessed. But the houses, they will not be able to monetize them. They will not be able to sell them, neither the house property, cars, or any such thing which they have occupied. So what we would see that the losses in case of banks keeps on increasing. There is the capital adequacy ratio or ratio of the banks will also decline. The result being because the financials of the bank would not be very strong, as a result of which the accepted norm is that they have at least 8% of the capital adequacy ratio. And we would see that the banks who had a higher ratio will see something around 8% is what they are looking at. They would like to their capital adequacy ratio with something operate around that percent. At the same time, people have lost jobs. We are forced to withdraw money from the banks, from the existing resources. Many of us would have earned bonuses in this particular quarter, particularly those working in the corporate sector. We find that many organizations have canceled these bonuses, or some of them have actually deferred the payouts. That would mean some of the expenses that we had planned to be done, either I will not do it, or I would do it by withdrawing for my resources. That would mean that there is a further stress on the liquidity of the banks, because I'm going to withdraw, but at the same time, the inflow at the banks would not generally happen. The another factor, which impacts the banks would be towards the exposure to the NBFCs. Now, the non-banking financial corporations, these are the one who actually happen to be one of the biggest, the biggest biggest loan takers from the banks. Now, with the same issues being impacted at the NBFCs, they too facing the liquidity, and because they carry more risk in their books, we will find that those banks having a large exposure to NBFCs also have a risk, the quantum of risk that they carry will also increase. Now let's look at the NBFCs. Now the NBFC is a carry to the more, or they cater to the more riskier segment of the society. They reach out to the people, to the poor businessmen, to poor businessmen who do not qualify for loan as per many banks. However, the NBFCs, they take a certain quantum of risk and are able to provide them loan. But because of this stress that would happen in the economy, the loans or the repayments not happening, we would see that the quality of the assets possessed or quality of the assets of these NBFCs would greatly reduce, and that would increase the risk of defaults. Furthermore, the situation got aggravated in some September 2018 when the IL&FS group actually defaulted. Further to that, there was some more, NBFCs like the Altico Capital, the Punjab and Maharashtra Cooperative Bank. They have defaulted, as a result of which the stress on the NBFC sector has increased, and of course, where they also increase the corresponding risk to the banking sector. Now, the RBI has allowed 3-month moratorium that would further create a significant drain on the liquidity of the NBFCs. The securitization, which is normally the source of additional funding through which they sell their assets to the banks, since they would be carrying more risk or there would not be adequate inflows happening, they will not be able to monetize their securities, and as a result of which this will further impact the performances of the NBFCs. The recent government measures to effectively make a direct purchase of the NBFC debts will provide some near-term relief, but it will not sufficiently address the structural funding weaknesses of the NBFCs. Now let's look at the insurance sector. The insurance sectors is something, people there, particularly in the global scenario, if you look at, there would be a lot of claims that these insurance companies will have to pay. Now in India, however, the claim ratio, when the claims that would not be as high as is more in most of the, which as it would be in the European and the American in the countries. Now, that would mean the insurance sector in these countries would face a lot of challenge, not only from the liquidity point of view, but in the overall on the as a going concern, many of these insurance companies may run into a problem. Now, let's look at in India perspective. In India, we have seen that the life insurance business accounts for nearly life insurance business grew in 2019 at close to around 9%. But in 2020, the growth is estimated to be only at 0.9%. Further, all the new insurance business is the drivers of growth in an insurance business. Now we estimate that close to around 42% of the premiums or the growth comes in from this new businesses. However, if you look at the data in April, the new business premium for life insurance declined by 32.6%. And this was the straight second month of decline. Not only that, we look at the investments that these insurance companies make. Their values have decreased because of the volatility and because of the decline in the share market. Their operational costs are rising. They are paying the salaries. They are having they continue to pay the salaries. Their operational costs increasing due to the crisis management, while at the same time it is not being keeping pace with the premiums that is supposed to be paid. Many of us would have decided to defer the premiums that was due. We would also take a moratorium here, or we would defer our payment because that has been allowed. This overall will actually impact the liquidity of these insurance companies. Though the IRDAI, the insurance and regulatory authorities, have allowed for the cover for giving some kind of additional coverage, they are allowed for within the existing policy, they are allowed to cover for some of the treatment. So you might see some of these companies coming up with additional riders that if you want to get yourself, to safeguard yourself from future kind of pandemic, some kind of a rider related to pandemic. And so that's something that we can look forward to. Also, the openness to experiment by issuing a sandbox regulation, which allows the insurers to experiment with products not covered in the existing framework, albeit for a limited tenure, will help the insurance, but I don't think so that would completely offset the problems or the issues which they presently face. The need is here, the emergence of a need-based insurance going forward. Let's look at the mutual fund sector. The mutual fund sector is again largely dependent on us. Where we invest, we have our SIPs. Now, as we discussed in the initial, when we were discussing about the personal finances, I requested, I had my suggestion that we should continue with the SIPs that we have. We should not look at coming out or withdrawing our investments. Similar and same would be so for all the corporate houses as well. Now the markets are down. We do not have an adequate coverage of the investments have not been adequately covered. We might see those people who have done their investment in mutual funds, they're facing problems. They might actually, go on to divest their money or, withdraw their investment to meet their immediate requirement. This might see that the liquidity at the mutual funds then there would be a crisis that may happen with enough savings or enough investments not happening, which will further lead to, the lower investment being done by them. Franklin Templeton, they decided to wind up their size 6 high yield debts, and which came as a shock to the industry. And this was one of the reasons because of the COVID situation. Further, with the panicking investors, it is not helping the mutual fund industry. So now many of us would not continue with the SIP. So my suggestion here would be, please do not panic. The situation is grim, but over a period of time, we will come out of it. So please remain invested, whether in the equity market or through the mutual fund. let's look at over a period of time and then see what is to be done. But I'm sure that in close to a year and a half, we would be back from the red. Even, to support that, the Ministry of Finance and Reserve Bank of India has also come out with various plans. They are encouraging the people to continue with the SIPs. Now, so these, these are some of the measures which can help the mutual fund, but please remain invested and do not look at discontinuing your investments in the immediate near future. So now, post this, let's understand what's the way forward. The way forward, some of the stimulus packages, which has been announced. One of them is for the banking sector. Now, there are various rates which are controlled by the Reserve Bank of India. When we talk about rates, when we talk about the repo rate, the reverse repo rate, we talk about the CRR, the marginal standing facility. What is these? These are nothing but different forms of loans being given by the central bank to the commercial bank. By regulating the interest on them, by regulating the interest, the bank actually controls the quantum of money available to these lenders, to these commercial banks, which can be lent out to the industries in general. Now, if you look at the CRR has been reduced from 4% to 3%. That would mean that of their deposit, that they are required to maintain a certain, all commercial banks are required to maintain a certain balance with the Reserve Bank of India, which is 3% of their net demand and the time liabilities. So that would mean if it's reduced from 4 to 3%, that means there are some additional funds available in the hands of the bank. Similarly, while reducing the repo rate and the reverse repo rate and of the MSF, it has given some additional liquidity to the banks so that they can lend out. But I have my own personal opinion says that I have a big question here, that many of this particular stimulus may not be very successful. The reason being, because as of now, we have the capacity. There are manufacturers who have the capacity, but there is no demand. And unless a demand is created, there would not be capacity increase that would happen. First, to ensure that the stimulus that has been given is utilized, for that we need to create demand. And once demand is created, we would have supply and then these funds being utilized. Let's look at some GDP recovery measures. We look at the MSME. There has been recently the Atmanirbhar Bharat scheme has been announced by the government. First, let's look at the micro and the medium and small scale industry. The MSME contributes they contribute close to around 29% of the India's GDP. They account for nearly 63 million plus units across the geographical expanse of this country. They contribute 6.1% of the manufacturing GDP, while 24.6% of the GDP from services. Now, why is MSME so important? Let's take the case of China. Now, in China, you have many of the cities which have become the hub for manufacturing. And why this has happened is because government has increased their participation in the manufacturing sector. The backyards of many of these Chinese home will have some kind of a setup where they are doing some kind of a manufacturing. With such large manufacturing happening across the Chinese geography, they have taking the benefits of the economies of scale. Their cost of production has lowered, and that is the reason why if they are able to sell goods at a price which is much lower even than the manufacturing cost for us. And this is where the push has actually come in, where the government says that let's focus on manufacturing in India, Make in India campaign. So now, if we have the similar kind of a setup, then we will see that India from becoming a service sector oriented growth to a manufacturing oriented growth. The MSMEs will have to play a very, very important role if we have to achieve the $5 trillion mark. And for this, the vision has already been set through this Atmanirbhar Bharat and through the Make in India campaign. They will not only contribute largely to the economy, they will also be employing a huge number of our labor. and this can act as a big tool to reduce poverty and to create employment. Now let's talk a little about the Atmanirbhar Bharat. Though this scheme is not something which has been driven by the government as such, but these are something which generally appeals to me. It appeals a lot because, as I mentioned in my MSME, that we need to look at make in India goods. Not only make in India goods, we also now look at the made in India goods. Now, I know of many people in the vicinity. Now, we know of many people in my vicinity who are using various platforms to sell the Chinese goods as for now. So they are the ladies of these houses who are selling their products over. Excuse me, can everybody be on the mute, please? Yeah, thank you. Now, what we have seen that these ladies, they are selling goods, Chinese-made goods across the WhatsApp platform. They are using Facebook to sell their goods. This can act as a large market for the people who are trading who would like to trade in the Indian goods. I would suggest that let's look at using this platform to sell India-made goods. Let's look at a growth which is a manufacturing base, because a manufacturing base means a growth, a holistic growth compared to a service sector growth. Another important thing, that what I have been mentioning across all my slides through is that what is most important at this point of time is to create a demand. And unless we have a demand, we will not have a supply. And if we do not have a supply, we will not see the economy growing. So what my suggestion would be to all of us here is to continue to do your spend as you would do in a normal course of a day. Do not curtail your consumptions if you have the means. Let's look at from the investment perspective. Let's continue to invest. Please do not exit the market, but relook at your portfolios. If required, take the services of a portfolio manager, though it will come for a cost, but then the gains out of it will be much more than the cost that you would pay. Have a proper mix of the debt and equity, and this will help you to grow your investment over a period of time. And please, and once again, a request to all, please do not believe in rumors. There is no immediate rules for success. Instant gains may have happened by a fluke, but in most of the times you would lose money. So please do not follow the messages floating on the WhatsApp media asking you to invest. Please look at the stocks, look at the fundamentals. If you do not have time to navigate through the financials of these companies, please use the services of a portfolio manager. From the insurance perspective, I cannot stress this further, that we need a health insurance as well as a term plan. Please look at the opportunity for buying them, for taking. Of course, you need to evaluate what are the schemes which are available, but please have them as a part of your spend and don't treat this as one of the investment tools. Now, something from the social perspective, I personally do, and I know many of the people who spend or who allocate a certain portion of their income towards the community well-being. I would request, please do, how bigger that small amount be, please start doing that. That would help the cause and the welfare of the mankind. You avoid the use of one-time plastic. A huge amount of our national income is being spent in cleaning the plastic mess that created by us. If it is not done, that can be used to improve or to take much more development activities. From the travel perspective, please travel domestic when the times are appropriate. This will generate employment. You would be supporting a lot of these people who have lost their monies recently. Not only that, I'm sure you're going to enjoy much more in your own country and you would be safe as well. And something, that's the last thing that I would want to say here is that if possible, have a second source of income. Even I have been trying on this, though not successful, but I would surely keep exploring this option. This will make you more self-dependent, and it would make the country more self-reliant. With this, I just like to bring in something, which is something very appealing, which, over the last few months I have discovered, is the government scheme. Now, there are so many government schemes which are there, which are available, which I was absolutely unaware. If you look at the MSME sector, there is specific schemes which are given by the government. Now, these schemes, if we were to take the advantage of them, we would see that we have been financed by many of, under the scheme, we have been financed by the government at a very low rate of interest. For example, the coir industry, where a huge amount, up to 60% of the fund requirement is be financed by them at a very low rate. Similarly, if you want to do many other small setup, a small scale industry you want to set up, whether it's a cotton based industry or a fabric based industry, there are many schemes available. Let's look at something for the farmers and agriculturists. There are schemes which are, when I talk about the farmers and agriculturists, I also mean, the associated industry, which is the fisheries, the dairy along with it. I look at the dairy sector. When I was exploring that, I found that if people who want to start with the dairy sector, 80% of the finances are being provided by the government. Let's look at, there are schemes which are there for the handloom and the handicraft sector. There are schemes for the startup ventures. There are schemes for the women empowerment. There are schemes which will help you to do your investment. There are schemes for education, there are health schemes, schemes for the disabled, and schemes for the laborers. Now, why I'm sharing this is because you as teachers, so you can reach out when you are discussing this with your students. Please ask them to visit these sites. I was unaware that the laborers also have a pension scheme available to them. By just with a small meager investment every month, post their retirement after the 60, they can withdraw pensions from the government fund. This is something that came as a surprise to me, because not only me, I spoke to close to around 40-50 people in the last few days, and none of them were aware. My purpose of putting this over here is just to see that please share this with your team so that they can explore these websites more, take advantage of the schemes. And I believe, that we all think of becoming chartered accountant, doctors, pilots or police officers, but not many think of becoming an entrepreneur. For me, what I would suggest is, let's look at think like and work like an entrepreneur. Your financial assistance can be met through many of these government schemes. Let's explore them. Please share these sites, or link to these sites with your students, and I'm sure we would see that many more entrepreneurs coming into India. So that's something which I shared my thoughts from the overall economy perspective. I would like to end my discussion with some of these thoughts which are there. Your mind is a battle. Be it commander, be its commander, and be its commander. Warriors are the ones who win. They are those who will fight. Everything you want is on the other side of the fear. It's a tough choice. Be a survivor or become a warrior. So with this, I would like to end my discussion. I would urge each one of you, as suggested by government and everybody and each one of us, please stay safe, wash your hands regularly, maintain social distancing, stay healthy. Thank you. Now I would open this for any kind of questions that I have. I would like to take this up.
Hello.
Yes, Ruchi.
Yeah, thank you, sir, for your stupendous knowledge sharing. It was indeed a valuable session for all of us. I mean, you really, shared with us the recent updates which we were really not, updated with. We had just heard about it, but we were not really updated in so much of depth about it. Fine. Before I open up the session for the question answers, I would just like to tell the participants that the feedback form is already been floated on the chat box by Girish Tere sir to kindly fill up the feedback form. And now I give it over to Mr. Sadiq Hassan for taking up the queries to sir.
Good evening, sir. So there are a few questions, sir.
Please.
Am I audible, sir?
Yes, you are audible. At times you are breaking. In case I'm able to hear, I would request you to kindly repeat that. I may request you, sir, to do so.
How many questions, sir? 2 questions.
No, I'm not saying. I'm saying I'm just, in case I'm unable to hear, I would request you to repeat them.
Okay, sir. So first question is regarding which sector will be benefited by COVID-19 question.
Oh, okay. A very interesting question, Let's look at, okay, for me, I believe that the e-commerce industry is one which is likely to do well. Sitting at home, we all now would not like to venture much out of it. We would like to order things over the internet and get them procured. And so that would give a growth to all these e-commerce based companies. Now, when I talk about e-commerce, we have large platforms across, for the where people go online and try to sell their goods. Even the Facebook, tying up with the Geo is one of the reasons why they want to reach out to each of these home, and because of the vast expanse, they would like to take the advantage. So I believe the e-commerce industry is one which can be in a green sector. And the other one, which I feel, would do well, is the pharmaceutical industry. The pharmaceutical industry is something which, there would be this situation that people would continue to buy the medicines. The supply chain would be impacted for a while, but then as soon as, the things open up, there would be many more kind of, people would take a lot of kind of medicines to protect themselves from the COVID situation. And we would see that many of these pharmaceutical company doing very well. And India being an exporter of pharmaceutical products, you would see, and the increase for various medicines or drugs increasing globally, you would see this particular sector, mainly in India, would do pretty well. That's my thought on it.
So next question was, sir, is the infusion of 20 lakh crores into the economy really going to help? If yes, then how your take on that, sir?
Okay. So, a 20 lakh crore, even if somebody was to ask me to write it, I would find it difficult to write. But that nearly amounts to close to what mentioned is close to 10% of the GDP. But let's look at, major portion of it is coming in the form of a stimulus being given to the banks. But if I look at the banks, as I mentioned in my slide, the banks can use this facility of additional spending only when there is a demand. Unless there is a demand, this would remain unused. So a 20 lakh crores so to call as 20 lakh crore would not remain. By the time it reaches out to the people, it would be very low. Yes, that also includes certain other schemes which have been offered in terms of giving, cash transfers to the farmers or to the laborers, providing them with free food in the coming for the next couple of months. But even where this has been offered, they are offering pulses and rice. But probably the government has not understood that to cook the food, you also need oil, you also need the Indian masala, and you also need various other ingredients to prepare a food. From where are they going to fund that? So it's, the things have been said, looks to be rosy, but in real paper, when it comes, the implementation of it becomes more important. And, so that 20 lakh crore would not really mean a 20 lakh crore. We'll have to really see what it transforms into the utilities or what it transforms for the benefit of the people. So I don't think so 20 lakh crore will actually mean 20 lakh crore.
Sir, to what extent the Chinese investment will be attracted in India? Since
Chinese investment. So, okay. Now, the Chinese, again, these are something which I have been reading across various articles. The Chinese companies have been actually trying to, take over or do opportunistic takeover of many companies, whether in Europe or in US economies, because of the low valuations. India did a proper measure by timely announcing the policy whereby any country which has having a land border with India will need special approvals from the government before you can do it. So to that extent, if the government analyzes that this investment can have or can mean hostile takeover or an opportunistic takeover, the government may not allow. The sufferers would be, the small time startups or the technology companies. But if you look at overall, it is for, safeguarding the India's interest. So the Chinese investment, I would prefer the Chinese investment to on the lower side. But there are means through which these are routed. So over a period of time, we might see this getting impacted. But once the things open up, we might see the Chinese investment coming back into India.
and sir, regarding the investments in companies and construction companies. People would like to know opportunities there.
Sorry, in which sector you said?
Sir, what about the opportunities in construction sector?
Construction sector.
Opportunities, yeah,
Okay.
opportunities in construction sector as well as investment in pharma sector.
Okay. Now, if you look at, let's start with the construction. The real estate market has been down. There are close to around 4.3 million units remaining unsold. Many of these your people have, started, delaying the final delivery of the houses to the people who have invested. We have seen, this has also been allowed under the RERA. Now, what does that mean? That the time for completing these projects are being extended, time is being given. But unless and until there is a demand which happens, so the construction industry will not look up. There are so many unsold inventories that are there. Now, many of these developers, they would keep marketing their products that, this is a good investment option. But if I were to look at it, the construction industry don't look to be very good. It's people do not have a house, and if their financial capability permits, they may go for a first one house, but second house is not an option, that is not suggested at this point of time. So the construction industry looks difficult. But if I look at the pharmaceutical industry, the pharmaceutical is one sector which will remain green over a period of time. So, this sector, though it has been, being little, it was little shaky towards the start of the year or towards the end of the previous financial, means towards the end of 18-19. But, overall, the pharmaceutical sector will keep growing because the demands in the pharmaceutical is not going down. And with the APIs being not coming in from the Chinese country, but from the China, many of the API companies have been closed there. It gives an additional opportunity for the Indian companies to explore that option. So I see the pharmaceutical industry to remain in green. But of course, if you were to looking from the investment point of view, please do evaluate the economics or to evaluate the financials before you go on to invest in any of these companies.
And sir, last question regarding a lot of migrants who are moving on. So what will have an impact on the industrial part, construction part, and how people will come back?
So if you look at the migrant workers, the situation that has been portrayed across, it looks really, really sad presently. People having to travel hundreds and hundreds of kilometers traveling back to them. It's a painful sight. People are losing lives. They are dying on the road. These are some things, which hurts me as an individual, as a human being. Now, talking about the migrant laborers, the laborers, once they, go back to their own hometown, it is very unlikely that they would come back in the near future. And with the monsoon season coming in, which is a sowing season, you would see that many of these laborers would actually stay back, would do some kind of a farming activity in their hometown, and only post the monsoon season they are traveling back. So you would see that the labor crisis continues to happen across the industries for till the end of August, and only from September onwards we might see that the labor is coming back. So the situation for the supply of labor will be difficult till the end of September, and post that you would see something better coming out in terms of the workforce supply from the labor perspective.
Okay. Thank you, sir. Thank you, sir. Thanks a lot, sir.
Thanks,
for answering all the questions.
Thank you very much.
Ruchi, I'm back to you.
Okay. Thank you so much, sir. Now I invite Dr. Nishikant Jha for a formal vote of thanks. Over to you, Nishikant, sir.
Thank you, Ruchi. Thank you for inviting me for a formal vote of thanks. I would like to thank all our higher authorities of Thakur College, our trustee, our management, and our honorable principal, ma'am, C.T. Chakraborty, ma'am, who is always guiding force, who is always inspiring us for conducting this kind of sessions. I would really thankful to our IQAC coordinator, Dr. Santosh Singh, sir, and both of them, they has very rightly stated that this will be a challenge and opportunity. And sir has rightly stated that financial sector reforms are very, very important. And a deep gratitude and thanks to Amit Chaudhary, sir, for his valuable input. And sir, I really admire the way you have taken up entire webinar from personal finance, term insurance, credit card, SIP, stock market, property, and key economic indicators like from different industries, service sector, manufacturing sector, etc. And then you have taken the impact analysis through financial sector, banking, NBFC, mutual fund, insurance. I believe even though the participant from non-commerce, non-finance background is also found it very, very interesting. And that is what we found in the chat book, that the session was fantastic. It was very interesting. All credit goes to you, sir, for your valuable and effective input for all of us. Sir, I would like to mention here that we have 1,662 national participants for this webinar and 5 international participants. So this is at present, and many more is going to avail the benefit through our YouTube channel that will be available forever and ever, and they can evaluate what are the opportunities, what are the challenges is available in this situation through financial sector, and that they are going to implement as well in their and as sir you have rightly stated your personal experiences regarding debt and equity or regarding entrepreneurship. Sir, our college and IQAC as making so many skill development program for the student, and we are really promoting entrepreneurship in our college under the able leadership of our principal ma'am and all the faculties. Lastly, I'm thankful to all the participants, almost 1,700 participants across India and world for participation of this webinar. And I'm also thankful to all my department members who have worked very hard for making this event as a grand success. Once again, thanks to all of you. And one note, please, in Zoom chat box, there is a feedback link. In YouTube description chat, there is a feedback link. Kindly fill your feedback form. It's very, very valuable for us. And once again, Chaudhary sir, thank you very much for your valuable time and input, sir.
Thank you.
Over to you, Ruchi.
Thank you. And thank you everyone who has participated this. Thank you for giving me this opportunity. Thank you, Mrs. Chakravarti and all the organizing committee. It was a very good session. In fact, I also learned quite a bit, when doing my research on this. And hopefully, what I have shared will bring in a benefit to all the listeners over here. Thank you. Thank you for this.
Sir, can we have one request, because it was coming on the chat box also? If you can share your PPT, we can share to the participants.
Sure. So I have already shared that with Ruchi. That depending upon how you want to take it, you can accordingly share that with the team.
Okay. Thank you, sir.
Thank you very much.
Over to you, Ruchi.
Yeah, sir. Yeah, definitely, sir. I will forward it to everyone. I'll take care of that. It is very rare for industry experts and dominators like Mr. Amit Chaudhary to find time to interact with this type of lobby in the situations and time we are all in today. Being one of the leading edge in the industry and also a trendsetter, we don't have enough words to thank you, sir, for all that you have given us today. And we hope we have more of such future endeavors with you, sir. And I also thank to all the participants, to all the viewers for for your grateful presence and for pouring in so much for this webinar. I hope you had a great takeaway from this webinar. And by a closing salutation, everyone just take care of yourself, be at home, be safe. Thank you.
Thank you.
Thank you, sir. Thanks a lot.
Thank you.